Well, it's Friday. It's the final day of our 5-day business journey here on Business Morning for this week. Or did we save the best for the last? You'll find out in the next 55 minutes. You're welcome. I'm Eni John McQuarrie. Let's start with oil prices. It slipped in early Asian trade today, following a rebound in the previous session as investors remain torn between worries over tight global supplies and fears a recession could dampen oil demand. Brent crude futures fell 39 cents to $104.26 a barrel, dropping away from a near 4% rebound yesterday. U.S. West Texas Intermediate crude slipped 35 cents to $102.38 a barrel, having settled 4.2% higher a day earlier. Both contracts are set to decline for a second week. Trade this week was marked by a sharp sell-off on Tuesday, where WTI slid 8%. And Brent tumbled 9%. Brent's $10.73 drop was the third biggest for the contract since it started trading in 1988. The sell-off in commodity markets caught a reprieve as traders shrugged off recession fears and turned their focus back to undersupply issues. However, the economic uncertainties remain, with the inverted benchmark bond yields pointing to an unavoidable recession, which may continue to weigh on commodities prices. Back here in Nigeria, members of the Natural Oil and Gas Suppliers Association of Nigeria, NUGASA, have announced plans to take the growing crisis in the petroleum industry, which has resulted in acute scarcity, high cost of diesel and petroleum motor spirit, otherwise known as fuel, to the President Muhammadu Buhari. The resolution to visit the president was contained in a communique read to journalists by the national president of NUGASA, Mr. Bennett Courier, at the organization's second annual National Executive Council and stakeholders meeting, which was held in the Federal Capital Territory. Mr. Courier reeled out a number of interventions required to save the downstream subsector of the nation's oil and gas industry from total collapse, including rebuilding and revitalizing Nigeria's 4 refineries, special interventions through the provision of dollars to petrol importers by CBN, streamlining taxes to avoid multiple taxation by the Federal Inland Revenue Services, and the establishment of Energy Bank through an act of the National Assembly.
At the end of the day, this crisis is hitting us. We can't pay our bills anymore, so we need assistance from the government, particularly on this dollar, because the high cost of this diesel, if you trace it, is as a result of non-availability of dollar. Also, we also ask the government to encourage, if possible, increase crude oil for the modular refineries in the country, particularly some, let me mention one name, Watersmith and others, and this refinery in Niger Delta, that's Niger Delta refinery, should be given enough crude oil so that they can blend more. For now, all these things are temporary solutions so that we can get somewhere before we sink.
Well, apart from the issue of fuel crisis in the country, of course, there are a whole lot of other issues that seem to be battering the economy of Nigeria, even though it's not peculiar to the country alone at this time. For instance, the World Bank has said that a global rise in food and fuel prices is likely to drive an additional 1 million Nigerians to the already projected 6 million expected to fall into the poverty bracket by the end of this year. Nigeria's subsidy continues to climb. Now, state governors are saying they may not be able to pay salaries. And of course, Nigerians seem not to be ready for that removal of subsidy, which will increase cost of living further than what it is at this moment. And then when you talk of subsidy, it fits into the country's debt stock, which rose to 41.6 trillion naira in the first quarter of this year. That's a representation of 2.05 trillion naira increase compared to 39.56 trillion naira recorded as of December last year. When it comes to dollar term, because of course we do have foreign debt, it rose to $100.1 billion. Well, let's look into this and some of the reasons you're feeling what you're feeling in your pockets, in your bank accounts, with Dr. Muda Yusuf. He's the Chief Executive Officer of the Center for the Promotion of Private Enterprises. Good morning, Dr. Yusuf. Thank you so much for joining us.
Thank you very much, Ini. It's a pleasure.
So, Dr. Yusuf, how dire is Nigeria's economic situation at this time? We have heard and had warnings from IMF, from World Bank, from analysts in Nigeria. How dire is the economic situation at this time?
Yeah, thank you very much. The situation is very bad. And the indications are all over, even from just some of the reports you read a few minutes ago. There are quite a lot of issues in terms of our fiscal space. I'm talking about the fiscal operations of government and the sustainability of the entire economy as far as the fiscal operations of government is concerned. And when I talk about the fiscal operations, it's both at the federal and the states. I just said in your report that even some states now are expressing concern about their capacity to pay salaries. And I'm sure we have similar thing at the federal level. So in terms of fiscal sustainability, I think the risk of what I can call bankruptcy, the risk is very high. It's like we are close to the precipice. And the issue is that we are not doing what we are supposed to do. Of course, this issue that we face has both a global dimension, but it also has a domestic content. If you cannot manage the external variable, which is what I would call the exogenous variable, we are talking about global oil price, we talk about the pandemic before now. Now we are grappling with the Russian invasion of Ukraine and all the disruptions. But the kind of policy response that should take place has not been taking place. Now we are grappling with a very high level of deficit. The deficit in the budget initially was about 6.4 trillion. Now we had an additional 4 trillion for purposes of subsidy, which practically will have pushed it to about 10 trillion. And with the way we are going, at least in the past few months, the subsidy figures is likely to climb higher than even the 4 trillion. So we are looking at a deficit figure in excess of 10 trillion by the end of the year. And this is going to reflect on the issue of debt. Because the higher the deficit, the higher the debt. We reported that the debt profile as at first quarter of this year was 41.6 trillion.
Yes.
And the reality is that by the time you add the indebted to the CBN, the ways and means now is in excess of 15 trillion. The latest report I was reading was about 19 trillion. By the time you add that to 41 trillion, you're already talking about something close to 60 trillion. You have the AMCON debt, which is also a sovereign debt. You have contractual arrears, which has not been factored in. So the situation is quite bad. And I think we need to do something very quickly to deal with these issues. There are reforms that need to take place, and government has unfortunately been foot dragging on all these reforms. The first is the reform in the oil and gas sector. You heard the report by the Association of the Gas Suppliers. Look at the way they are lamenting. And this is reflecting in practically all aspects of the economy. Now the cost of diesel is over 800, 820, 850. How many businesses can survive with that? Especially at a time where we are having frequent collapse of national grid. So the pressure on businesses, the pressure on the citizens is quite high. And the situation has been compounded by our foreign exchange management system. Yes, we have external problems, but if you had a proper adjustment with our foreign exchange policy, the situation will not be as bad as this. Practically all investors are complaining about scarcity of foreign exchange.
All right, Dr.
If you have
Yusuf.
the right kind of foreign exchange policy,
Yeah.
you'll not be complaining of this liquidity crisis.
All right, Dr. Yusuf, you mentioned a whole lot of things, which is not new to our conversation here in Business Morning, even on channels, television generally. You talked about reforms, you talked about subsidy, and well, I think just a couple of days ago, LCCI did recommend the removal of subsidy because this feeds largely into the debt stock of the country. But on the other side, on the other hand, the removal of that subsidy will also bring a high level of hardship to the already struggling consumers and liquidity that is available. So from your perspective, the president, I think, has even address this to say that this is not a good time. When the IMF talked about subsidy, that this is not a good time to remove subsidy. From your own perspective, what is the solution, at least with this subsidy, to see if there's a way to reduce the debt stock, and then this threats from, I don't know if to call it a threat, by the state governors about not being able to pay salaries?
Well, the subsidy issue is, I agree with you, is a very difficult issue to deal with, particularly at a time like this. At a time like this, first because of the political situation, but more importantly, because of the social context. Because the level of poverty has risen to a level that we have not seen in many years. So I take your point. But first, we need to accelerate the issue of this, our domestic refining. We don't have an update on that. An acceleration of that, we were promised about 1 year or so for some of these refineries to come on stream. We haven't seen much, and it's bad enough. We've had this administration now for 7 years. If for 7 years we cannot get the refineries to work, I don't think that is a good commentary at all. Because we are in this crisis mainly because we are importing practically 100% of our petroleum product needs. Secondly, on the subsidy, I agree with you. The shock on the system, the risk of social unrest is very high at this time. But we can still find some creative ways to create a private sector corridor for a private sector window to supply these petroleum products. Now, there are all sorts of estimates now as to how much we are consuming. The figures are climbing every day because of all the very complicated ecosystem, which is creating room for corruption, creating room for smuggling, and these things are so very difficult to manage. So if you have a private sector window that can give access to the private sector to get foreign exchange and to be able to import on their own, because the situation is this complex because we have only one single supplier. Whether we are talking of diesel, we are talking of aviation fuel, we are talking of PMS, even though we have only one single supplier, importer, which is the NNPC. And you know the problem an economy faces when you are dealing with a monopoly situation. That is why the situation is as bad as it is. So we should have a framework that will remove this monopolistic structure of supply so that we can have some element of competition. That will help to moderate prices. Secondly, because of all the complications in the area of supply and the cost of transporting these products from Lagos to other parts of the country, the cost of diesel, the cost of logistics is climbing. So my view is that we can just adjust the threshold of the fuel price, maybe from 165 to around 200, so that at least the system can function. We can get these fuel queues to disappear. And I can tell you in many other parts of the country, even as we are speaking, outside Lagos and Abuja, fuel is selling for around 190, 195, 200. That is the reality on the ground. And if you get to many of these filling stations in all these places around, outside of Lagos and Abuja, there are no queues because you have a price that is clearing the market. So we have to come to that reality. Adjusting the threshold does not amount to total removal of subsidy. Because if you remove subsidy totally, you'll be talking of close to 500 naira per litre. That is not feasible. But for those who are in the business We need to adjust the price a little, and the labor must also show some understanding in this instance. Let's adjust the price a little. Let's give some headroom to accommodate the high price of diesel and the high cost of transportation. Because all the trucks that are moving these products are running on diesel. Diesel is now about $8.20, $8.50 per liter.
All right,
So
Dr.
in order to make their businesses sustainable, we can look at that.
Okay, Dr. Yusuf, obviously, I think that from conversations that I've had and heard, if they want to convince Nigerians that, I mean, because there's even the question of the existence of subsidy to start with. And if we cannot tell categorically our data on consumption, then convincing Nigerians on subsidy or convincing them or even labor on the need to increase the price is also in jeopardy, you know, because, I mean, when we don't know the number of what we're consuming and we're hearing of oil thefts and even being exported illegally to some other countries, petrol being exported illegally to other countries. But all of this, I said all of this to ask, do you think that the individuals who are seeking to be, let's even start with the president, who are seeking to head the affairs of Nigeria, do you think that they have looked into the details of the Nigerian economy and some of these disturbing figures and realities? Have you heard them talk about probable solution to these things that the country is facing economically?
Well, for many of them, what we are just hearing about is the everyday complaints about the situation of the economy. That things are bad, that they are going to do this, they are going to do that. For most of them, we don't have details as to how they want to deliver these things. Not many of them are addressing the issues of fundamental reforms. Not many of them are putting on the table the strategies to address this problem. Because there's a whole lot of policy changes that needs to take place. There are a whole lot of regulatory changes that needs to take place. There's a whole lot of institutional reforms that needs to take place. We are not getting much from the political aspirants or candidates on this. Most of them just tell us what we already know, that the economy is import dependent, exchange rate is this and all of that. So we need to get more from them. That is if they also have a proper understanding of these things. So that I think we are short of. I mean, we talk about foreign exchange. The CBN has been talking to us about homegrown policy, and look at what the kind of situation this homegrown, the so-called homegrown policy has brought to Nigerians. Recently, I was talking to some people in the aviation sector. Foreign airlines cannot remit their proceeds. They have an arrears of close to $500 million. What kind of image are we projecting to the world when we have foreign investors here who cannot repatriate? Just because we have a foreign exchange policy that is rationing for foreign exchange administratively. These are some of the issues I expect the candidates to begin to address and tell us what exactly are they going to do about it. Because certainly these things are not working. So to come back to your question, the candidates must engage deeper. We all know the problems. Yes, we have energy crisis, we have foreign exchange crisis, we have insecurity and all of that. All of these things are hitting the citizens and hitting businesses from all angles. Look at the rate of inflation. It has never been so bad that we have prices almost doubling and tripling on some basic items. So the candidates need to put a lot more on the table.
All right, Dr. Mude Yusuf, the Chief Executive Officer for Promotion of Private Enterprises. Well, it's obviously an ongoing conversation, and it's a reality that we are living with. And I guess right here on Channels Television, the best we can do is to bring people like you and also do our research. Well, we don't need to research too deep, obviously, because we buy petrol, we buy food, so we know these things and we live with them every day and bring it to the fore for everyone to see. Thank you so much, Dr. Muda Yusuf. We're supposed to talk about the Constitution Amendment, but we'll do that in the nearest future because that also has an impact on giving a little bit of hope. But right now, we've run out of time. Thank you so much for your time, sir.
Thank you very much, Ini. Thank you.
So we'll take a break now. When we come back from that break, there's this big elephant Dr. Muda Yusuf has been referring to a lot of time. We have a whole segment dedicated to it. That is FX, foreign exchange. We'll talk about it after the break here on Business Morning on Channels Television. Do join us again. Welcome back. You're still watching Business Morning on Channels Television, where reports have it that a number of banks now require as long as 6 weeks to process Form A requests. And many banks had in March significantly dropped spending limits on their Naira cards to as low as $20 monthly. It was previously $100. Well, this is just one scenario when it comes to the issue of FX. In Nigeria, we've heard repatriation of funds in the aviation sector has been halted, and we have a lot of money hanging there. Well, these are some of the realities that we have when it comes to FX management in Nigeria. Well, we have joining us to discuss this, Tosin Shukoya is the Chief Executive Officer of Commercial Partners Asset Management. He joins us from Lagos to share his thoughts and help us understand some of these dynamics of this. Good morning, Tosin. Thank you so much for joining us.
Good morning. Thank you for having me.
Yeah, so you guys are into research and you have your ears close to the ground. Tell us some of the realities when it comes to FX management and the shortage of supply in Nigeria.
Thank you very much. I think the challenge we have is the demand and supply imbalance, and it's a structural problem. Until we begin to deal with this problem might continue. I am aware that, and I think you are also aware because it's out there on the streets, that the divergence between the parallel market and the CBN official rate is widening. This is, I think, is the monster that we've created. The system has created, and it has entrenched itself in the FX market. And unfortunately, the system is feeding this monster, and this monster is going to continue to grow in size. And what do I mean by that? Let's put it in context. So at the beginning of 2020, shortly before COVID, the FX official rate, in fact, the parallel market was trailing behind the official rate at 360, 361. What has happened over the years is the fact that that margin, the FX parallel rate, has taken over from the official rate. By 2021, you see a disparity of about 80 Naira. By the end of 2020, going into the early months of this year, it is widening by almost 40% of the official rate. Right now, as of today, the official, the parallel market is trading around 620, 623. What has happened is it has increased, it has expanded away from the official rate by almost 50%. What has happened is we begin to see a lot more demand moving into the into the parallel market. And until that is being addressed, the arbitrage opportunity, which is the monster that the system has created, will continue to grow in size. And that would continue to put pressure on the currency. My view is that, and this is the view of commercial partners, is that we need to begin to look for measures of how to converge the rates between the official and the parallel market. Earlier this year, the central bank came out with, I think it's a commendable initiative, the RT200, that is raised to $200 billion export revenue. I think that it's a laudable initiative. It's a lofty idea, but the challenge with that is the execution. So they've identified 5 key anchors, all right, ranging from value-adding export facilities to the biannual, non-oil summit. those initiatives and the anchor, it's not just going to be driven by the central bank, because what would happen is what we've experienced over the years has been a demand management strategy, and it hasn't worked. The demand management strategy, to a layman, means that you begin to ration your supply of FX into the market. Whereas you're not looking at the supply side. The supply side is very essential to the balance, because I started off by saying that the challenge we're having in the FX market is the demand and supply imbalance. So if you focus only on the demand side and you don't look at how to strengthen the supply side, you will still have the imbalance. So the initiative to strengthen our export revenue and move it away from what we earn today from the crude oil is very important, but it is not going to happen overnight. So it is a strategy that we expect will be effective, and we'll see the results in the next 3 to 5 years.
All right.
But execution, like I said, is very important. So what that means is that all stakeholders must come to the table.
Okay, we'll get to the stakeholders in just a moment, but let's try to understand the problem. You did point out that from your perspective, it's a demand-supply thing, and you also talked about the disparity between the rates in the official window and the unofficial window, the parallel window. But the CBN governor has often alleged to round-tripping as a factor in the shortage of FX. Have you seen that?
We've seen that many years. Right? So it's like it's an industry that is thriving, unfortunately. And like I said, the system has created this monster, and we need to address it. So I don't see a situation unless CBN decides to take a radical action to converge the official and the parallel market. You would still see people rent-seeking to arbitraging the difference between the official and the parallel market. I mean, we're talking about almost, 200 naira? It's an incentive. So until you look at how to discourage that incentive, people will continue to perpetuate that, unfortunately.
So what does it take, to have one window? Some economists have talked about this, that we should have one window. What are the pros and cons of having one window?
I mean, the first con of having one window is that it will hurt us. It will hurt us at the short term, in the short term. And why do I say that? So if you converge it, and I'm guessing that you converge it in the middle of maybe between 420 and 620, so you converge it maybe at 550 or 580. What that means is that immediately we begin to have imported inflation. So there's going to be inflationary pressure. And what that means is that you would expect the prices of goods and services, because we are largely import-dependent country, the goods and services prices will continue to soar. When that happens, we will suffer in the short to the medium term. But in the long term, it's important for all the stakeholders to begin to look at how to encourage export revenues. For instance, today, the crude oil price or crude oil and gas sector, they contribute 10% to the GDP, but they contribute largely to our export revenue, and it shouldn't be. That is a structural dysfunction. We should begin to look at all the non-oil export, commodities that would, enhance the pool of export revenue. So what do I mean? The RT200, if properly executed, will begin to enhance our export revenue. Then if you look at the supply channel as well, it's important for foreign investors coming into this country to have confidence in the liquidity of this country. So the confidence has been completely eroded. That's why you would not see any investor coming into this country. Then you talk about the security and other challenges that we have. All those other challenges must be addressed by the fiscal authorities. So you don't leave everything only to the monetary authorities. So all the stakeholders, when I said all the stakeholders, it's important that everybody comes to the table. and address the problem at heart. When that is done, like I said, at the short to the medium term, it's going to be hurting. But the medium to the long term, we will begin to benefit from it. Look at the main nations, for instance, where Nigeria is and Mexico. Nigeria only, our exports revenue is just about 70 billion. The Mexico in the mid nations has about 500 billion. The 500 billion export revenue is likely contributed by the manufacturing of that country, the manufacturing sector of that country. So we need to do a lot to our manufacturing sector. We talk about a lot of agricultural products, but those products we are not utilizing the potentials of agricultural sector in this country. So a lot has to be done with the non-oil commodities, starting from not just exporting the raw materials, but the value-adding composition must be addressed as well. You can imagine from 70 to 500, that's a huge disparity.
All right, so you keep saying the stakeholders. I do understand from what you've said, of course, the manufacturers will be one of those. But let's go back to the RT200, which you have mentioned earlier. And you said, from your perspective, it's a good idea, but it's the implementation and all stakeholders must be involved. Could you paint a picture of a perfect implementation of the RT200 that you think could at least boost the supply of FX?
If you look at the 5 key anchors, okay, so you talk about the export facility for value addition. You talk about the FX rebate. You also talk about the expansion facility for non-oil. For each one of these anchors, it's important that, for instance, not only the banking community helping with payments and helping with FX, rebate payment, but the fiscal authorities as well, they need to come to the table. So if, for instance, you are a cocoa producer, and we're talking about, and I think when the central bank governor earlier this year was talking about the RT200 program, and he cited an example that Cote d'Ivoire and Ghana contributed more than Nigeria to the entire 150 billion, industry in cocoa producing and cocoa chocolate manufacturing. You begin to ask yourself that for cocoa producers in this country, what facility are you giving them to incentivize them to produce a lot more and to scale their business? What kind of infrastructure do you have in place with regards to transportation and logistics to help them get their goods to the market? So when you put all of these together, so I'm talking about the banking community, for instance. I come from the banking community, so I understand that the kind of incentive you need to give in terms of interest rates that would promote their business to thrive, that's very important. If you're talking about the fiscal authorities, in terms of tax holidays, what kind of tax holidays are you giving them? And in terms of infrastructure facilities, do you have the road or transportation networks and logistics that would help them get their goods to the market? Then you talk about the 4th key anchor, which is a non-oil, terminal. If you go to the port today, you would understand that it's very difficult for any export, producing company, okay, to do business because there's a lot of challenges at the port. So if you create a terminal that is solely dedicated to non-oil commodities, you begin to see traction in that area. You see people are encouraged to go into the production of non-oil commodities. Right now, commodity prices are, at their highest level all time, but we are not benefiting from it. Why? Because we are not scaling our business. We are not even getting them to the market. We are not competitive enough. So, for instance, when we're not enjoying oil, you're not even enjoying non-oil as well. And this country is actually blessed with not just oil, but with non-oil commodities. So, Nero, if you understand that when we say the stakeholders, it is not just limited only to the central bank. But the bankers as well, they have a role to play. The fiscal authorities, they have a role to play. And we must all come together to ensure that those evil machineries that would make sure that this initiative doesn't work, we must fight against that. Because the moment you go or combat this, you are taking some people out of the business.
Okay. All right. Well, you've suggested a lot of solutions, but for you, which one do you think, can be implemented? I mean, when you look at the economy and what's going on at this time and the election coming up, and of course that impact that it has in the FX space also. You've talked about creating one window, finding a balance, albeit with the possible consequences. You've talked about the RT20, you've talked about cocoa. Which one do you think, if the government focuses at this time, would feel at least a major degree of impact?
So you have between short, medium, and long-term plan for all of this, okay? I think that if you ask me, the first thing that central bank has to do is to restore confidence in the naira, because that has been eroded completely. So you have backlogs not only in aviation, you have backlogs in foreign portfolio inflows, those that are waiting to repatriate their funds. I think that the central bank has to bring all of those backlogs down to a significant level. That's, I think, it's a low-hanging fruit that they need to quickly combat. All right. Then you also need to begin to look at how to strengthen the supply channel. So strengthening the supply channel means that in one of the 5 key anchors that I mentioned, the first one is value addition export facility. They must implement that immediately. Okay. All right, Mr. Tosin Oshikoya, the Chief Executive Officer of Commercial Partners Asset Management. Thank you so much for your suggestions. And we do hope that the authorities would implement at least the low-hanging fruits you've suggested, and then we would see the impact. Thank you so much, and enjoy your weekend. You too.
We'll take a break now. When we come back, we head to the market. Do stay with us. This is still Business Morning on Channel 7. Welcome back. Well, let's head to the markets now. Well, I'm happy to say that Nigerian equities market is back. Well, let me not say it's back. At least we closed with a bullish sentiment yesterday, and we do hope that we will get to the weekend on this pleasant green mood. Will.
Good morning, Ini. Yes, definitely. I'm looking forward to us closing Friday today on a green note. Yesterday we marginally, escaped the red zone.
It was a
0.01%. It was very, very slim chance for us to have just dipped to the red, but we thank God.
the God of the equities.
That we just scaled through, and investors are smiling. Definitely, we're happy that the market.
No, Will, I don't think. Okay, they are smiling, not laughing. Just a little smile.
A smile, yes, just a smile, because we are hoping the profit takers don't, invade the market today. So, they are, as you mentioned, bullish sentiments have returned, though marginal, to the equities market. Interest in access core yesterday, which was up about 2.1% yesterday, supported the market's growth. The performance that we saw, the all-share index aged marginally. It's at 51,563.73 points. Equity cap strongly at the 27 trillion naira mark, not moving there, not letting go of that level. We hope it continues. And month-to-date loss, year-to-date gains unchanged, 0.5% and 20.7% respectively. Now, total volume of trade yesterday, of stocks traded yesterday, was at 143.29 million units. It was a green activity chart yesterday, although the increase that we saw from Wednesday's trading was marginal, not so much. Value 1.76 billion naira, and deals 3,875 deals were transacted yesterday. Jay's Bank was the most traded stock by volume yesterday. 42.1 million units of its shares were traded. GT Co followed suit, still holding on to that position for 3 days now. 19.45 million units traded. The Airtel Africa, led the most traded stock by value yesterday. Now, for sectors, we saw 3 sectors in the green. Insurance was down, oil and gas unchanged from its closing figures on Wednesday. But we have Afolabi Benro to give us more insight on what's happening in the market. Afolabi Benro, trader at Stanbic IBTC Stockbrokers. Good morning, Afolabi.
Good morning, Will. Thank you for having me.
Now, Falabi, we saw a reversal from the negative trend we've been having and seeing in the markets these past few days. Now, tell us what really drove the sentiments, and do we expect that to continue to be sustained today?
Okay, I think you had touched on it earlier on. Access Co saw an increase yesterday because we are still seeing bearish sentiments in the likes of GT Co, in the likes of Zenith Bank and some of the other banks as well. So the sentiment is still sort of bearish, but we have a couple of names that are outliers in the market that are helping the market to see the marginal gains that we saw yesterday.
So do you think that investors are going to, what's the opening call this morning? Are you seeing anything trickling in at the moment? Is there any hope for investors for a bullish close?
It's not looking like it's a bullish close. The market is actually very flat as we speak. We're still seeing selling in the likes of GTCO, Zenith, and some of the other names like I'd mentioned. So that hasn't changed. Hopefully we might see some positive sentiment continue in the likes of Access Co and some of the other names. But so far, the market is looking very, very flat for the start.
So at Dover, one of the stocks the shares that were suspended by the Nigerian exchange has announced the release. Well, it was unlisted, but they're back on the stock market. They have announced the release of their 2021 audited financial statements and Q1 unaudited financial results. The company reported 63 billion naira revenue in Q1 2022, but their full year 2022 results wasn't so impressive. Could you tell us about that?
Yes, so they actually reported a loss of about 3.8 billion. The company attributed this to the subsidiaries and the acquisition of Enyo Retail, which was concluded last year. But if you're looking at the Q1 results, we're starting to see some recovery. At least it's back in a profitable position, and we expect that this may likely continue as we see more of the results this year. Looking at the stock in the market, it was released from suspension yesterday. Over 1 million shares traded, although the price didn't move, it still closed at 13.05. And looking at it today, about 300,000 shares are traded at 13.05. So the stock is still trading flat in the market as we speak.
Thank you so much, Falabi, for that insight. So what's the outlook for next week? This is Friday. What do you think is going to happen next week?
So I expect to have a quiet start. Obviously, Monday and Tuesday are holidays, so we expect the investors would start to look for opportunities once again and look for where the bargains are. But we expect that it'll be a very quiet start to the trading session next week.
Falabi Benro for your insights on the program. Falabi Benro, trader at Stanbic IBTC Stockbrokers. So we're moving on. We see that the NESD, the unlisted market, it closed on a bullish note yesterday as well. 0.02% of marginal gains, 772.07 points, still at the 1.02 trillion naira mark. Volume turnover was down yesterday, 8.29 million units traded, value 138.35 million, and that's how the market rolled yesterday. Fixed income space still, trending upwards in terms of yield. So, Ini, that's what we have for the markets.
Yeah, well, thank you so much, Will. I will have a bigger package on the markets tomorrow at Capital Markets at 7 p.m. here on Channels Television. Please do join us then. All right, and just before we have Ladi with the crypto space, there's the breaking news that Japan's former Prime Minister Shinzo Abe has died. He died after being shot at a political campaign event in an attack condemned as absolutely unforgivable, citing a senior member of Abe's Liberal Democratic Party. The former Prime Minister died at a hospital in Kashiara City, Nara, where he was receiving medical treatment. He was 67. The attack was yesterday at about noon in the country's west region, where Mr. Abe was delivering a speech. Unfortunately, he died today. We do pray that God will console his family, friends, and well-wishers. Well, let's head to the crypto space now with Ladi.
Right, Ini, yeah, the market is not looking so bad this morning. It's a green Friday. We're seeing extreme fear improvement with the extreme fear in the markets at 20 points this morning. And we see market cap 961 billion, up about 5.02%, and volume traded in the total crypto space up 19.59%. So we're having a green Friday. It's not looking bad. Let's bring in our guest now, Michael Inaji. Hello, Michael.
Happy Friday, Ladi. Thanks for having me.
Yeah, great to have you, Michael. So there's this report about Ethereum 2.0 stakers sitting on unrealized average loss of about 55%. What's happening with that?
Yeah, so basically what the stake ETH product is it's basically a synthetic product that allows people to take advantage of the gains of the new ETH beacon chain. So basically ETH is moving to proof of stake. And rather than have miners validate the system, you're going to have people bond their coins, and they're 32 ETH, and then they're going to be giving staking rights, and the reward of that is yield. And so if you do anything negative on the system, you get your coins slashed and you lose them. But if you bond your coins and you basically validate transactions, you get rewarded. However, though, people have started putting their coins on this so-called beacon chain and staking them. However, the thing about it is you cannot unlock your coins. So your coins are kind of stuck until ETH moves into proof of stake. So people created this synthetic contract called Lido, and it's basically staked ETH, but it's represented on another chain, and it's just one-for-one representation. The problem with the staked ETH is the fact that the liquidity is not as deep. It's mostly the liquidity is mostly centered around decentralized exchanges, and so it's very easy for it to be pegged. And so with the drying up of liquidity we had recently, you saw the peg go from 99 cents on the dollar for one stake ETH, all the way as low as I believe it was 80 cents on the dollar. And part of that is why Three Arrows Capital blew up. They had synthetic ETH that they staked and they put up as collateral for leverage. However, though, because the one-to-one peg depegged, and they put some of their collateral on DeFi chains, they lost that one. So that was part of the liquidation, and that's why part of why Celsius and part of why Three Arrows Capital fell apart is because of the stake ETH depegging. No one ever thought it was going to be depegged because it was one-for-one. But however, though, it's slowly risen back. Now I think the difference is only about a 3% a spread difference between the stake ETH and the real ETH. Right. But long story short, it's basically created a cascading liquidation event because the one-for-one peg wasn't something people thought would never break as good as a USDC peg for USD to USDC.
Quite interesting, and we're seeing Bitcoin now staying above $20,000. Very quickly now, do you see this as the new trend going up for Bitcoin price action?
Some people see us maybe it's going to 26, but I think this is just a bull trap. Eventually, we're going to break down and we're going to hit 10K, between 10 to 12K. This is all a bull trap. The economy hasn't entered recession yet. There's no way we're going to recover before the recession even starts. That's never happened in the history of mankind. So, the recession is due for next year. So I think 10K is more likely than 40K or 35K at this point.
All right, Michael with the crystal ball there. Thanks so much, Michael. All right, now, Ini, so you hear it from Michael there. He still sees 10K on the cards.
Not a pleasant way to end the week, but Michael always has a way of delivering it direct.
Just as he sees it.
Truth is bitter, but face it, man.
Exactly.
Well, thank you so much, Ladi, for that update from the market. And that's where we draw the curtains on the program for today. Thank you so much for being a part of these 5 days of business journey that we had on Business Morning. Of course, we'll have another 5 days next week, but at least we'll take a breather for the weekend. Business Incorporated will be back at 1:30. Will Ibong will be here to give you update from the world of business. And also remember, 7 p.m. tomorrow, Capital Market will delve into the capital market to give you all the details for the week. I'm Ini John Mekwa. Enjoy your weekend.